Hey, what's up, boys and girls? Alright, welcome back to another edition of the weekly market analysis. So this week, alright, I have a question from one of my subscriber, right? Stanley dropped me an email. He said, Rainer, right, I have a question, right? I'm wondering, is it possible to have 25 winning trades in a row? Because I've seen traders, right, he made 25 winning trades in a row. Then he's asking me, right, Rainer, so do you think it is possible to achieve 25 winning trades in a row? And my answer to Stanley is this. It's very simple, right? Stanley, right? Winning percentage in trading is just one side of the equation, right? The other important side of the equation is your risk to reward ratio, right? Because with only winning percentage and not looking at the risk to reward ratio, it's not giving you a clear picture. And likewise, if you only have your risk to reward ratio, but you don't include your winning percentage, right? You will not have a clear picture either. So in order to have a clear picture, right, to know whether a trader has a positive expectancy in the market, you need to look at number one, your winning percentage, and number two, your average risk to reward ratio. These two numbers, right, combine it together, you will know whether you have a positive expectancy. So back to your question earlier, right? Earlier question you asked me, whether is it possible to win 25 trades in a row? Yes, it's very much possible. And in fact, it is very easy to accomplish it, right? One way I can think of is to have a really, really small take profit target and to have a really wide stop loss, right? Say, for example, I have a 2 pips of take profit target and 100 pip as my stop loss. So I can tell you, I will go winning, right, 30, 40 trades in a row, right, of 2 pips profit along the way. But what happened is, when I hit my losses, right, my losses is going to be a negative 100 pip stop loss. And now the question is my winning percentage, are my wins, alright, consistent enough, right, to offset that one large loss? That is the question that, you have to find out. Because according to the probability, right, according to statistic, right, the moment you have a very small stop loss and a very large stop loss and a very small take profit target, what you're going to get is a lot of wins, many wins in a row. But when your losses come, that losses is going to be large, it's going to be huge. It's going to wipe out a lot of your gains, right? The question is it going to wipe out your gains and more? Or is it, your gains are actually, consistently enough to offset the large loss, right? This is a question that you have to find out. So thank you for your question, Stanley, alright? I hope I answered your question. And oh yeah, alright, another variation, right? Sometimes, it may not be a 2 pips take profit target. It could be, say, for example, 100 pips take profit target and a 5,000 pips as your stop loss. Again, the math will work out because your stop loss is relatively larger than your take profit target. So the math, right, you can manipulate it and, come up with a very high winning percentage trading system. So, yep, thank you for your question, right? I hope I answered your question. So in this week's market analysis, we will be looking at a few things. We'll first look at the dollar Mexican, we'll look at the euro dollar, as well as the New Zealand yen. Then I'll share with you a little bit of insight between the swing trading approach as well as a trend following approach. So I think this week's video will be, I would say, extensive. I'll be covering quite a bit, right? So I hope you enjoyed it. So with that, alright, I'll see you there. Alrighty. So first up, we'll start off with the dollar Mexican. This is the monthly chart of dollar Mexican. And you can see it's bullish, right? You look at the monthly chart, you look at the last 1, 2, 3, 4, 5. The last 5 candles, right? We have 5 months of consecutive higher close, right? So the path of least resistance, needless to say, is towards the upside. But the thing is this, right? Based on this monthly chart, it is hard to find a trading setup to get long. I mean, because honestly for me, I don't have any particular trading setup for me to get long based on this monthly chart. So what I like to do is I'll go down into a trading time frame of mine, right? I like the daily chart and I look at the daily chart and now I see, right, there are possible repeatable patterns in the market that I can trade off, right? So first up, one thing you'll notice is this, the 20 and 50 period moving average. They are currently acting as dynamic support. So notice that, historically, based on the last few months of price action, price tends to come back towards the 20 and 50. Then we have the bounce higher, retraces back to the 20 and 50, a bounce higher, retraces back to the 20 and 50, a bounce higher, retraces back to the 20 and 50 period moving average, and another bounce higher. So just to share with you, the red line over here is the 20 EMA, the 20 period EMA, and the blue line over here is the 50 period EMA. Because I've got quite a few traders asking me, what are the two moving averages that I use. So I use both the 20 and 50. No special reason why, but just for the fact that, I'm very comfortable using both of them. So what I'm looking right now is for price to possibly retrace back towards the 50 period moving average over here. And there's a possibility for me to get long on the dollar Mexican. So that's my take on the dollar Mexican. I'm bullish, and areas where I look to get long is somewhere around this blue line over here, the 50 period moving average. So up next, let's look at gold, shall we? So gold, I think we have been covering it for, pretty extensively over the last few weeks. So gold, again, let's briefly talk about the trend on the weekly chart. It's clear to see that, the path of least resistance, the trend is down. You have lower highs, lower highs, lower highs, and lower highs. Then what is significant is that there was this multi-year support over here, which was broken, I think, a couple of weeks back, right, when this candle break and close below the multi-year support. So right now, I'm actually bearish on gold. I'm actually short on gold, but for those of you who are not short on gold, here are some possible opportunities where you can get short. Looking at the 4-hour chart, what I'm noticing is this. The 20 and 50, they are currently acting as dynamic resistance. And if you look at it, right, besides this dynamic resistance, you can also conclude that there is another resistance area coming over here, right, around this region. So if price does retrace into this area, right, inch up into the coming weeks, this area would be an area that should be of interest to you if you are looking to short this market. Because I think there will be traders who put their stops above there, and there will be, usually incentive for price to, approach levels where there is a large number of stops. So this area is an area to look out for. For more aggressive traders, they'll simply put a sell order down there, get their stops above the resistance somewhere around here. For more conservative traders looking for confirmation, what they'll do is they could wait for price to inch up to this area, right? Wait for a false breakout higher, then followed by another close lower, right? Another close lower. This is again another very valid setup that you can look to trade based on the false breakout higher. So there are a few ways for you to trade gold, right? But the thing to know is that, where is the area that you want to do business from, right? Where is the location that you want to trade from? So these are some trading ideas that, you can consider, right? But always, right? Always have a stop loss in place, because the markets can do anything. So whichever trading setups makes the most sense to you, right? You also need to know where you're going to get out when you're wrong, and where you'll look to get out if you're right. So that is on gold, right? Something to share with you. So up next, let's talk about the euro dollar, right? The euro dollar is something that I want to cover as well. Euro dollar from a trend following perspective, right? I'm not looking to trade it, right, from a trend following perspective. But if you're looking to trade it from a swing trading perspective, then okay, then we have something that we can consider, right? Because I've noticed we have this resistance here, we have this support coming in over here. So these two areas are basically areas that you want to consider trading from, right? Areas where you want to do business from. But honestly, if you ask me, I'll be more inclined to take a shot over here compared to, trading from this support over here. The reason being is that, if you look at the bigger picture, right, the trend on the euro dollar is still downtrend, right, in the grand scheme of things. Especially so if you look at the weekly chart. So I'm more inclined to take a short opportunity rather than a long opportunity. And because of the fact that I'm looking for a swing trade, right, what I'll be waiting for is for price to retrace higher, come into this area that I've highlighted. I'll see if there's any rejection at the area, right, or I'll look for a false breakout before establishing a short position. So after which, right, if I get into the trade, right, my first targets will be somewhere around here, right, the nearest swing low where I look to take my profits. So it's only going to be a swing trade from me. I'm not looking for anything massive from the euro dollar. And if that happens in the coming weeks, right, this is a trading setup that I'll be looking at. So similarly, right, what I want to share with you is this New Zealand yen, right? It basically has the same trading setup as the euro dollar I mentioned earlier, right? This is the resistance. This is its support. And you have another support coming in over here. Right? So if you look at the bigger picture, right, on a daily chart, you can agree that the New Zealand yen is in a downtrend. So on a 4-hour chart, what happened was we got this setup this week, right? Price basically rally, right, into this resistance over here. There we had this false breakout higher, right? Price attempted to rally once again, but it failed to. That's why it gives us inform a bearish engulfing pattern. Then, you know, traders who got short based on this pattern, right, chances are their stop loss is over here. First profit target wise, right, or their profit target, they'll be looking to take profits at this swing low over here. This is a very legitimate swing trading opportunity that occurred on the New Zealand yen. So again, right, before you put on a trade, you have to understand, you know, what kind of trades you're putting on. Is it a trend positional trade, or is it going to be a swing trade? So once you have decided the type of trades you're going to put on, then follow your plan exactly, right, depending on the trade that you're putting on. So this is the New Zealand yen setup that I want to share with you as well. So last but not least, I want to share with you the Russell 2000, right? It's a trade that I did not take, but I thought it was a good trade. So let me share with you why I think the Russell 2000 was actually a good trading opportunity. So where it is here. Okay, this is the chart of the Russell 2000, right? So if you notice, right, this is basically 2015, the 52-week low. It's over here. Then what happened is that there was this bullish engulfing pattern, right, that formed, taking out these lows over here, and then it closed higher. So chances are it's telling you that, you know, traders who went short are basically trapped, right, because price rally higher, the breakout has failed. Then those traders, you know, they are trapped, and the chances are they need to cut their losses as price trades higher. Then again, you have another bunch of traders who are looking to long and support. They'll go long and support, and currently they should be in the money, right, if they place their stop loss away from the support area. Another confluence factor that came in is that if you look at the moving average, the 200-day moving average, basically it closed above this black line over here, which is the 200-day moving average. So you have a multitude of confluence factors coming in. You have the trend is still up, coming, right, let's write it down, right, you have the trend still up. You have the 52-week low. Number 3, you have the 200-day moving average. And number 4, what it came in is that you have this bullish engulfing. So I thought this was a very nice setup, right? But honestly, I wasn't in this move. So again, I'm not sure if any of you caught this move, right? Because if you're in this move, I think the first level, you know, to be aware of is this swing high over here, right? There is possibility that, you know, some traders will look to take profit, or traders are looking to short. That is a key area that they will be looking out for. So if you are in this trade, if it's a swing trading trade for you, that is a level, right, that you may want to consider taking some profits off. So again, this boils down to the question, whether is it a swing trading trade or is it a trend following trade? Because if it's a trend following trade, then what you want to do is, you know, to ride the position as long as possible. Then, you know, you put in a different trade management, a different trailing stop mechanism to capture the trend. So all this boils down to the very fact that you, as a trader, every trade you put on, understand where you're trading from, right? Whether it's going to be a swing trading, whether it's going to be a position trading, or whether it's just going to be a day trading. If day trading, you'll close out your position within the day itself. So yep, that's all I have for this week's market analysis. All right, I think it's pretty extensive. Right, I covered trend trading setups, I covered swing trading setups. So a little bit for you to digest. So with that, right, if there's any questions, right, any comments, just feel free to leave it below. With that, I wish you all good luck and good trading. I'll talk to you soon.